Tonight, we begin with a staggering number, $1 trillion. That's the size of China's record-breaking trade surplus, a figure that's almost hard to comprehend. It's not just a milestone for China, but a signal to the world that the balance of global trade has shifted in a dramatic way. This isn't just a statistic, it's a seismic shift in global power, one that's sending ripples through every major economy. For decades, China was known as the world's factory, churning out everything from electronics to clothing at an unprecedented scale. Now it's not just the world's factory, it's the world's dominant exporter. Even as its own economy shows signs of slowing down, this massive surplus means China sells vastly more to the world than it buys, a gap so large it's actively reshaping the very structure of global trade and the flow of goods across continents. The impact? Floods of Chinese goods are upending industries and jobs worldwide, forcing companies and workers everywhere to adapt or risk being left behind. It's not just economics, it's politics. The debate over China's trade practices is now front and center in parliaments and congresses around the globe. Governments from Washington to Brussels are on high alert, scrambling to respond to the new reality and protect their own industries. China's export machine is now its main growth engine, a vital lifeline as domestic demand falters and the country faces new economic challenges at home. But this export-driven success also highlights a critical weakness. Chinese consumers and businesses aren't spending enough. This didn't happen overnight. It's the result of deep-rooted trends. Years of careful policy, adaptation, and strategic planning led to this moment, as China navigated global headwinds and shifting alliances. When faced with tariffs from the US, China didn't slow down. It simply found new customers, expanding its reach into emerging markets and strengthening old partnerships. The trillion-dollar surplus is more than a number. It's a declaration to the world that China's economic dominance is now overwhelming, and its influence is only growing. As of December 2025, the world is grappling with this new reality, trying to understand what it means for the future of trade, jobs, and economic security. The rules of global trade have been rewritten, not by treaty, but by China's relentless output and its ability to adapt faster than anyone else. The world is watching and waiting to see what comes next. Every country, every industry, is now recalibrating its strategy in response to China's rise. The era of China as a mere factory is over. It's now the engine of global trade, driving the world economy into a new and uncertain era. Not long ago, Chinese goods flowed mainly to the US, filling American stores with everything from electronics to clothing. The United States was China's biggest customer, and trade between the two giants seemed unstoppable. But then came tariffs and a trade war, as tensions rose, and both sides imposed new barriers. Exports to America slowed dramatically, threatening China's economic momentum. But China didn't retreat. It pivoted, searching for new markets and opportunities. Europe quickly became the new target, especially for electric vehicles and green technology. Chinese companies shipped record numbers of EVs, solar panels, and batteries to European ports. European leaders welcomed affordable EVs, seeing them as a boost for green goals, but also worried about the impact on their own car makers and workers. Meanwhile, Chinese products surged into Southeast Asia, Australia, Africa, and Latin America, reaching new consumers and businesses. Southeast Asia became a crucial hub, sometimes assembling Chinese parts for re-export, blurring the true origin of goods and making it harder to track the flow of trade. This deepened China's economic ties with its neighbors, making regional supply chains more complex and harder to untangle than ever before. Today, ASEAN is one of China's largest trading partners, with trade volumes growing every year and new agreements strengthening their economic bonds. By diversifying its export markets, China reduced its reliance on the US and built a more resilient, flexible export engine that can weather global shocks. The trade war aimed to decouple the US from China, but instead, China coupled itself more tightly with the rest of the world, forging new partnerships and routes. The result? China's influence is now more widespread and deeply embedded in the global economy than ever before, touching nearly every continent. The trillion-dollar trade surplus is proof of this global pivot, showing how China has adapted and thrived. China's strategy wasn't just about survival, it was about bold expansion, investing in new industries and building new factories to meet global demand. Today, the world's supply chains run through China in ways few anticipated, making it a central hub for manufacturing and logistics. The global trade map has been redrawn, and China now sits firmly at its center, connecting continents and economies. The world must now adapt to this new reality, as China's export engine continues to shape the future of global trade. China's trade surplus isn't just about booming exports, it's also about surprisingly weak imports, a trend that's raising eyebrows around the world. While exports soared to new heights, China's appetite for foreign goods has noticeably shrunk, leaving many international brands and suppliers concerned. The reason? A deepening crisis of confidence at home, as uncertainty clouds the economic outlook for millions of Chinese families. The property market is shaky, youth unemployment is high, and families are saving, not spending. Many are putting off big purchases, worried about the future. Chinese consumers are cautious, paying down debt instead of buying cars or luxury goods. Even everyday spending is under pressure as people tighten their belts. Businesses are also holding back, wary of uncertain policies and economic headwinds. Many companies are delaying investments and hiring, waiting for clearer signals from Beijing. Private investment has slowed dramatically, meaning less demand for foreign machinery, technology, and components that once fueled China's growth. The result? Fewer imports, deepening the trade gap, and making China's surplus even larger than before. To keep growth alive, Beijing doubled down on exports, selling abroad what it can't sell at home, and relying on global demand to prop up its economy. This strategy props up the numbers, but it also reveals internal fragility. The impressive export figures mask deeper problems within China's domestic economy. China's export boom is a sign of both strength and weakness, a powerful engine for growth, but also a symptom of domestic troubles. The world feels the effects: less demand for their goods, more competition from China, and growing anxiety about the global balance of trade. The trillion-dollar surplus is as much about what China isn't buying as what it is selling, reshaping global markets in unexpected ways. The imbalance is a warning sign, not just a victory lap. It signals that China's growth model is under strain, and the world should take notice. China's internal struggles are now a global issue, with ripple effects that reach far beyond its borders and into the heart of the world economy. Why are Chinese goods so irresistible? Price is key. A weaker yuan and falling factory prices gave China a huge edge. As the yuan dropped, foreign buyers could get more for their money. At the same time, Chinese factories slashed prices to move unsold goods. This double discount made Chinese exports nearly unbeatable. For buyers worldwide, cheap Chinese goods were too tempting to resist, even amid political tensions. The result? A perfect storm for China's export sector. Price, not politics, drove millions of purchase decisions. The trillion-dollar surplus was built on this relentless price advantage. A trillion-dollar trade gap has global consequences. In the West, alarm has replaced concern. This is now seen as a strategic threat. Policymakers accuse China of unfair practices, subsidies, currency moves, and more. Workers in manufacturing outside China face layoffs and factory closures. Lower prices help consumers, but at the cost of jobs and industrial strength. Companies are split. Some depend on cheap Chinese goods, others demand protection. This division weakens the West's response. Governments are fighting back. Europe investigates Chinese EVs, the US considers new tariffs. The language has shifted. De-risking and economic security now dominate. The surplus has shattered old trade assumptions. Trade is no longer just about economics. It's about national security. The world is entering a new era of competition, not cooperation. The fallout is just beginning. For China, the export boom is a lifeline, keeping factories open and people employed. It's also cementing China's dominance in future industries like EVs and solar panels. But the risks are growing. Over-reliance on exports makes China vulnerable to global backlash and protectionism. If markets close, China's export engine could stall, triggering crisis at home. The export model also delays needed reforms to boost domestic demand. It's a short-term fix for a long-term problem. The trillion-dollar surplus may one day be seen as a warning, not a triumph. China's strength today could be its weakness tomorrow. The world is watching Beijing's next move. China faces a choice: double down on exports, or pivot to internal reform. International pressure is mounting for China to boost domestic demand. That means putting more money in people's pockets and encouraging spending. Another option: Let the yuan strengthen, making exports pricier and imports cheaper. But that risks hurting exporters and slowing growth. Most likely, China will try to maintain the status quo, exporting while managing global fallout. Diplomatic efforts may buy time but don't solve the core imbalance. The world can't absorb China's output forever. The next steps will shape the global economy for years. The stakes couldn't be higher. China's dominance is forcing companies to rethink their supply chains. The new buzzword, de-risking, not abandoning China but reducing dependence. Many firms are adopting a China plus one strategy, adding factories in Vietnam, India, or Mexico. But moving out of China is tough. Its manufacturing ecosystem is unmatched. Even with new assembly hubs, most components still come from China. True diversification is slow and costly. Some companies double down on China, others invest elsewhere. There's no easy answer, just a messy, expensive transition. The rewiring of global trade is underway. It's a direct response to China's overwhelming export power. China's trillion-dollar surplus is more than a number. It's a turning point. The era of globalization based on cooperation is over. Competition now rules. The global economic center has shifted decisively to the east. The surplus challenges the idea that trade is always win-win. Governments must now choose protect consumers or protect workers. Supply chains are fragmenting, creating new economic blocks. The world is becoming more divided, less efficient, but perhaps more secure. China's power to shape the global economy is clear, but so are its internal weaknesses. How China and the world respond will define the next era. The aftershocks of this surplus will be felt for decades.